right. Hey there. What's going on, everybody? Chris Franks with Texas West Capital. We've got beards and Bitcoins today. And I do apologize. I was having issues. I couldn't hear anything coming from the guys. They could hear me. They were laughing at me, pointing at me, making fun of me. I could not hear them. So I've got the AirPods in here. And I finally got it working. So I do apologize once again, guys, that we are running a little bit behind here. But guess what? Guess who I've got here? I've got the guys. I've got Mr. Andrew and Mr. Tillman over here. How are you guys doing? Coming in live from Bitcoin Nashville.
Bitcoin 24, loving it. It's a great conference so far. It's first day. It's industry day, so the action hasn't really even started yet. But it's got a completely different vibe and feel to it than any of the other conferences I've been to. It's the most straight-laced. I see more suits here than I've ever seen before. So I think we're cracking into the TradFi space for sure.
Yeah,
finally taking it serious, huh?
Yeah, it's definitely a different vibe than it has been in the previous 3 years, especially on Industry Day. We've been to a couple of sessions that have to do with Bitcoin and banking. Right now, there's currently a session going on that's very, very, very focused on Bitcoin ETFs. There's just a different feel, a little bit of a difference with the crowd. I do think that having it in Nashville maybe is, one of the reasons why having it in Nashville that people probably don't know on this channel is one of the largest global wealth management firms moved their international and global headquarters from New York City to Nashville about 7 years ago, Alliance Bernstein. So, that's TradFi of TradFi.
Yeah.
And so you probably have a contingent of those folks that are here, a contingent of folks that do business with them here. And then again, you have reasons for institutions to be here associated with spot Bitcoin ETFs now being a meaningful part of the conversation across traditional finance. So, yeah, definitely a different vibe, a good vibe. And Industry Day is always my favorite day because there's not 30,000 people here. There's like 3,000 people here. So you can move around, you can find a place to sit, you can have some conversations. We've been having some great conversations with customers of ours that are here. We spent some time with Scott Melker already this morning and today. So, you're able to navigate all of that with lots and lots of elbow room as opposed to squeezing yourself into different spots because there's 10x the people here tomorrow and the day after.
Well, and there's a couple of things that have changed as well as it pertains to the mining industry. Last conference, I don't remember seeing one publicly traded mining company there. And on Industry Day this year, I was able to go talk to the CFO, the CEO, and the COO of pretty much all of the publicly traded mining companies. So the access is unparalleled. I've never seen the access to publicly traded companies at a conference anywhere close to what it is now. So a lot of great folks, a lot of good information, but more importantly, just the access. I mean, where else can you have these types of conversations with the experts in the room and do it in such a nonchalant, easygoing manner? So it's great. It's the best conference from an access perspective and from a potential perspective that I've ever been to. Most of the other ones, if you go into the main exhibit hall and you go from booth to booth to booth, in previous years, I would say 90% of those companies don't exist anymore, and they're sure not represented here. Whereas now, if you walk through the exhibit hall, I'd say the vast majority of the companies that are represented there are either publicly traded or very, very large companies. So you're seeing a shift in who's buying space in the exhibit hall and who's really trying to push their products and what products they're trying to push. So a really cool immersion technology that I have not had a chance to see visually and up close in person. And it's amazing stuff. I mean, what they're doing in the mining sector, and the first conversation on stage that they had this morning was specifically geared towards understanding what excess capacity looks like on the grid.
Oh, wow.
And how to repurpose that excess capacity And so this notion was brought up that was very interesting, and I'd never heard it before, which was, if I'm a big believer that AI is going to rob a lot of the hardware that we need to support proof of work networks. But the way that they were positioning themselves to utility companies is very different than how AI is going to have to position themselves. What do I mean by that? Well, if I'm going to do a data farm, right, and I'm going to build a facility, it's relying on being operational 24/7. Whereas Bitcoin mining does not have to rely on being available 24/7. So what does that mean? It means that if I'm in Texas and 80% of the capacity is never used because we never reach peak demand, right? You have this large delta of capacity that is unutilized. So if you can contract with a mining facility at a specific KW price for a specific duration with an overriding clause in your contract that says, if we ever reach X demand capacity or demand, then that capacity comes back online to us and you have to shut your miners off and give us that power back. Miners don't care about that, right? Because the amount of time that they would have to shut down is very small. It's fractional as it compares to the overall. And there's no, the relative cost of that power consumption to a retail consumer at home, you can't compare those two things. So it's really, you're talking about, when you are propping up large domestic mining facilities, you're not talking about your true cost per KW. You're really talking about what your excess KWs look like and how you repurpose those in a way that's, most efficient and most profitable. And so if, we've got a couple of our customers on the Arch side that have very large, opportunities on that front. And it's really exciting to see the zero risk proposition that mining companies can now give people that have generation, power, and also have pretty much useless land otherwise. So I think that perspective alone was worth coming to the conference, because I haven't heard that anywhere else. And I haven't heard the fact that if you go to developing countries, for example, and they don't have the hard infrastructure that's needed to support development, right? Well, Bitcoin mining facilities can shoulder the infrastructure costs of that at a very low cost and just build it into their amortization schedule over a very long period of time. So it's a way for developing countries to get the infrastructure needed, but not give away the production to an outside third party, but really have it on tap and on demand for all their residential users. I mean, that is a powerful mathematical equation that's being deployed.
Man, I love that, because the first thing that comes to mind for me is, I know there are some of these miners who are looking, who are expanding into areas like Kenya and other areas of Africa. And we know that their power supply, it goes off often, often enough anyway, to really make a difference. I mean, we're here in the US, it goes out because of something that happens and we're like, what the hell, but it's back up. But over there, it's really quite frequent. So, hearing something like that, I mean, wow, the way that could benefit these countries who are not as developed, their infrastructure is nowhere near as developed as ours is. And we complain about ours as it is, to be able to use them Bitcoin miners, coming in with that and kind of building all into that, man, I absolutely love that. I absolutely love that.
Well, and the way that it was said on stage, which was brilliant. I can't remember who the speaker was, but he said, if you take AI, for example, every data farm that you build adds to the peak demand. Yeah. Bitcoin mining is the only thing that can be added to the grid and actually subtract peak demand. That's unlike anything that we've ever seen. So the efficiency that you have to measure in order to find out whether a mining operation will work is not the true cost per KW, but it's the amount of megawatts that are available to you. And it's essentially how much you can contract under a provision that allows you to work within the delta. And so if you're able to go to a region that, for example, West Texas, that has a tremendous amount of capacity, right? They have to be ready to turn the switch on for everybody, and the grid works. But how much of that capacity is actually used on a day-to-day basis? It's not that much, right? It's only during those really anomaly periods where you have a big winter freeze, or you have a tremendous heat wave that rushes in and stays there for a long period of time that's unexpected. Everything else is, within the normal range of operating bandwidth. Anything that falls as an outlier can be contracted against as an exclusion to that power being used for Bitcoin mining. That working within that excess capacity and working within that efficiency delta is a no-brainer. It's gold. So I anticipate, based upon what I see here at this conference, a lot of domestic expansion as it pertains to mining here in the States and what that looks like.
So what you're telling me is Bitcoin mining isn't dead.
It's not dead.
That people should have bought Bitcoin miners a year and a half ago and continued to hold. That's what you're telling me.
Well, I'm telling you, the smartest people in the room have figured out how to make the model work across pretty much every geographical region. You talk to some of them. I went to one of the booths. I'm not going to say which one. And it was very clear that they could not compete with the other groups, right? So it's just going to be who's the smartest, who's the smartest operator, and who can keep their expansion costs down below the catastrophic risk level. And what happens to them if Bitcoin crashes? And if you can navigate those waters, I would absolutely feel more optimistic about the mining space, especially the public mining space, than I ever have. It's a big vote of confidence from what I see here.
Yeah, well, you guys heard that Mara just pointed out there that they just spent $100 million buying Bitcoin, right? They bought 20,000 Bitcoin. They're back to the full hold that they were looking for. So everything they're mining, they're going to keep. Prices dipping, they're going to be buying up. It sounds like they've been listening to y'all. Y'all been talking about that last few weeks here. Buy it when it dips. Looking at that, and Mara here doing that thing. I think Mara's got something like 1.3 billion in Bitcoin now coming in there. So quite interesting, because we know Mara and we know Riot. Especially both have been expanding here, especially, last few months. So quite interesting when we look at them, and you talk about what you're just talking about there. And then of course, seeing Mara jump in here with that 100 million Bitcoin buy kind of thing going on.
Well, Amara's interesting from a couple of vantage points. I went to their booth, spoke to all their C-suite over there, and they're bigger than just Bitcoin mining facilities. They're doing a lot of mining development and submersion technology development that I did not know they even had it. They have separate divisions within their company that are looking at submersion miners and really pushing the efficiency bandwidth of those in a way that I don't know of anybody else that's doing. So I was incredibly impressed with their outfit. I do think it's very similar to MicroStrategies in the fact that if you're investing in a Bitcoin miner, it's a leveraged play on Bitcoin. That's what it is, especially if you've got a significant amount of holdings that are staying on the balance sheet. So I like it. I came here really skeptical about the public mining space, and I'm leaving here even after day one thinking, wow, there's a lot of smart people doing a lot of great things. And there's one common theme to all of them that are working. They're in an efficient, they're leveraged in some way. They're either leveraged by holding Bitcoin on their balance sheet, right? Or they're leveraged in buying a lot of equipment, hash rate capacity, or they're leveraged in any number of other ways. AI is one of the leverage. So they're having to really be diversified in terms of their income streams and be very flexible to unique environments that they find themselves in when they're building these facilities. But some of the facilities they have now are just, it blows my mind how big they are compared to 5 years ago. And
how quick it's grown, right?
It's not 75 megawatt facility. I mean, it's like a little city.
Yeah, absolutely crazy. Because you were involved in mining a while back ago, right?
Yeah, I started mining in 2014, 2013.
Yeah. So you've got that firsthand knowledge of how things, like from in the ditches, kind of here's how things are, here how they've been, which is why I love having you as part of our group here discussing things, because it's not just like me, I've never been out there mining. That the stuff I do obviously is from research and from charts and whatever. But having you come in and go, yeah, listen, when I was seeing it back then, this is how it was, and today, just a few short years later, it just blows my mind at what's going on there. I think that has a big impact on the way that people actually look at it, because as you said, we're talking about these leverage plays on Bitcoin, right? Whether you're looking at MicroStrategy, whether you're looking at Coinbase, whether you're looking at miners, it's a way of just kind of getting a potentially greater return on the Bitcoin, depending on how you get involved in it. So,
well, and it's working capital that is put into the local economy that has no taxpayer ramifications, right? If you think about if you have a natural gas well that's producing, and let's equate it. Most people don't know how to measure natural gas or what it's even measured in terms, but let's say a water spigot, right? And that water spigot is producing a constant flow rate of 3 gallons a minute. And let's say your garden only needs, depending upon how hot it is on any given day, 1 gallon to 2 gallons of that to stay, quote, hydrated and cool. You need that. So on the light days, you need 1 of the 3 gallons. And on the heavy days, you need 2 of the 3 gallons. Well, the really huge advancement that I've seen in the space is the fact that they have now AI that's measuring the real-time demand needs of the grid. So the demand needs of your garden, let's say it's fluctuating between that 1 gallon and 2 gallons, and it's doing it over a 3 or 4 day period, right? Now the mining companies have AI that's living on top of the architecture that allows the architecture to meet the exact demand that it can meet without putting additional burden on the grid, right? So it's literally measuring the flow of that hose and saying, okay, we can use 2 gallons right now to produce my Bitcoin. Oh no, we can only use 1.8. Oh no, we can only use 1.7. And it's literally automatically scaling back the production to meet the excess that is available on the grid. If you can do that at scale, I can't express to you how much wasted power the United States has that we can tap in and completely operate underneath that delta. Day one. I mean, there's absolutely, it's blue skies. I can't think of a better way to use the power, I guess, is the point.
Yeah, no, and I love it because, here in the U.S., again, especially, I speak from Texas because we've got our own grid. We've got our issues, obviously, with everybody moving here. Hell, we've even got Elon moving the headquarters of X and SpaceX here. And I keep saying, man, all the journalists missed, all my exes live in Texas. It was a perfect headline. And they just completely messed it up when he came over here. For those of you that don't know, one of the biggest songs from George Strait, king of country music, Texas. But yeah. So energy, definitely a big thing. So I think, always looking at how we can add more energy, but also if we can look at how do we optimize the energy that we already have so that we're, wasting less. It makes it a little bit easier,
Well, think about the local economy, right? So the local economy is stimulated by the jobs created at the facility and the economic output of that facility from the macro perspective. You've got employees working there 24/7. You've got people buying houses in the local economy. You've got all this impact that's positive to the cities that adopt this. And you have 0 negatives, literally 0 negatives. You have you have industry moving into your area without any subsidized effort. If when Nissan moved to Nashville, I don't know how long ago it was, 15 years ago, I lived here. And I know for a fact, for months and months and months, the state of Tennessee was flying them around on private planes and helicopters, looking at different sites and negotiating a set electric rate, a subsidized electric rate for that company. And Nissan does have the rider, based upon what I've heard, that they have to shut down their their plants in the event that, in this case, Tennessee Valley Authority, TVA, says, hey, we don't have enough power for the residents during peak times. Think about the subsidy of that to Nissan and every other major corporation that goes on today. Well, that subsidy does not have to exist for Marathon to come in and bring the jobs to your town that they want to bring through the mining efforts. That's a incredible advantage that they possess from a cost of goods sold perspective and from an impact on local community perspective. And I can tell you, it's not lost on them. That is what they are marketing. They have case studies about what the economic impact was for a specific town when they built that big 65 megawatt facility. And at the same time, they're working within an efficiency delta that is no burden to the taxpayer. That is insane.
That's lovely.
Yeah, it's
absolutely
really good.
Wonderful.
Yeah.
Andrew, man, what's going on? So what else do you see is going on over there, man? I mean, first day, industry day, obviously big news there. What Tillman's talking about with the miners and the way they're approaching it. What about you, man? What are you seeing over there?
Well, I think the session either just finished or is almost finished associated with the Bitcoin ETFs, and we are, we've seen since July 5th, we've seen enormous inflows into the spot Bitcoin ETFs. We saw BlackRock a few days ago have the third biggest inflow day in the history of that product. And, if you think about that, it makes sense that you're having huge inflows at the outset because there's been, let's call it a decade of demand.
Yeah.
But now, for all intents and purposes, we're 6+ months in to that asset class, that category. So to have a $500 and almost $50 million inflow day is kind of mind-boggling.
And that was after just the 450
right.
million or whatever the day before, right?
Right, correct.
Yeah,
So
crazy.
it is the velocity with which this category continues to move can't be understated. I had a couple conversations today where people were asking me, questions about the ETFs themselves, and well, if the ETFs are buying all this Bitcoin, like why is the price not moving significantly higher? And I took a moment and I said, let's take a walk down memory lane first of all. I said, the last time we hit cycle highs, both times we were 50 to 60% lower 3 to 4 months after we hit those cycle highs. 50 to 60% lower. That's a huge number, right?
Yeah.
We are effectively 12% below the all-time high right now. I said, that's the answer I'm going to give you. The answer that you want is that we should be at 85K because BlackRock keeps buying up so much supply. I said, but you have to understand there still are laws of supply and demand that exist. For them to buy that much Bitcoin, somebody has to actually sell it. I said, but the equilibrium associated with supply and demand at all-time highs has materially changed. So that curve, that highs and lows, the valleys and the mountaintops have been, radically adjusted. And so if you're sitting at 12% below the highs, 4 months after you've hit all-time highs, and in previous cycles you're at least 50 to 55% lower in that same time period. I don't know what the statistics say about the difference between 55 and 12%, but it's very, very meaningful, right? I mean, it's very, very meaningful. So that seemed to satisfy some of those questions. So of course everybody wants higher prices, right?
Yeah.
But at the same time, in the aggregate, we are at higher prices. We absolutely in the aggregate we are at higher prices, and oh, by the way, to pivot just a bit and talk about another category, and I do my best not to pat myself on the back.
Go ahead, man. Pat yourself.
But the Ethereum ETFs are playing out exactly the way that I said they would. Exactly the way that I said they would. So, the Grayscale ETH product, that particular Ethereum ETF, they set the fee at 2.5%, which is it's hard to
Insane.
fathom. And so you've seen aggressive outflows in the first 3 days of that product. Aggressive outflows.
Something like 10% or so of their total assets
Well,
under management.
yeah,
Ethereum, right?
10%, and you're talking about, we're by the end of the week it'll be $1.5 billion Ethereum will have left
It's
that
crazy.
particular product. So there's going to be an anchor around the Ethereum ETF category for a 3 to 6 month period, and it's Grayscale. Anybody that thought that there was going to be this, some people were like, well, we're going to see 20 to 30, percent, or maybe even 50% of the inflows into these products that we saw with spot Bitcoin ETFs. I'm like, absolutely not. There's no way that's going to happen. I said, because one, most people don't understand what Ethereum is. Two, Grayscale is going to be the selling of the Grayscale converted Ethereum trust is going to be even more. It's going to be hard to quantify. And so, how are you going to have net inflows when you're selling $500 million of Ethereum out of the Grayscale product? Just not going to happen. So the narrative is going to be very, very tough. It's going to be a long climb, because for the first 3 months, in the same way that spot Bitcoin ETFs, 90% of the days that they've existed, we've had net inflows. For the first 90 days of Ethereum ETFs, my guess is more than 50% of those days you're going to have net outflows. Okay, so that's a dramatically different narrative
Yeah.
than spot Bitcoin ETF. So it's going to be tough sledding.
From my
For
vantage point, it all goes back to, what is the current competitive landscape look like? Bitcoin has no competitors.
Right.
There is no store of value that's 90% through its inflationary curve, all done on the back of proof of work, all given regulatory clarity. Like, it is in a class by itself, absolutely. The problem I see with Ethereum is that if you want to buy Ethereum, you have to ask yourself a broader question than you do with Bitcoin. The question I have to ask myself when I'm looking at Ethereum is, okay, I'm looking at this as a smart network. Is there another smart network that carries as much potential? Is there another network that does certain tasks better? Is there a certain protocol that I'm missing in my evaluation of, quote, smart contracts and the functionality therein? You have to, once you get on that mountain, it is an avalanche of slippery slope. You will find yourself getting torn apart with technical details that you probably are not going to get to the bottom of the understanding bucket. It's an extremely complicated industry, and the consensus mechanisms that you rely on is like your core philosophy in life. And if you have to start in the evaluation process, you should start there. Like, how does the consensus mechanism arrive at consensus? How is the voting of a specific coin, how is it operate? And Ethereum, yes, it has been the leader, but by no measure is it the most efficient. By no measure is it the best from a capacity perspective. It's not the best in class. There is a lot of better alternatives. Now, it's been around the longest. It's had more projects built on its back, but those projects that were built on Ethereum's back, in a lot of ways, were illicit projects. They were the ICO pump and dump phase of crypto. Man. Like, how many?
2017.
Yeah, I mean, is that a mark of goodwill on Ethereum's record book, or is that a mar? I would consider it a mar. Like, it was not something that that I'd want to go back into. So I think Ethereum. I think the nuance of how you understand each protocol has yet to be discovered. I think there's a lot of people, even here at this conference, that look at them the same. And not only are they not even remotely the same, they're not even in the same category. They're completely different in every way. So I think Ethereum is, I'm not too pumped up about
Mark. Mark Yusko had a really good point on Scott Melker's show, I think on Tuesday. And he said, If Ethereum was launched and invented today, would anybody use it? Yeah, that's pretty powerful truth, right?
Bingo.
Pretty
And the only
powerful
people
truth.
that love Ethereum are the people who made a bloody fortune on the ICO. I mean, that if you talk to anybody that's a ETH, a ETH head, or what I call the meth head, it's a lot of it is because they just had a good run. They made a lot of money in the 2017, 2018 ICO days, and they think it's the greatest thing since sliced bread. But I'm with Andrew. I don't think you'd use it today if you started today at fresh, clean slate and really evaluated it on its own merits.
Well, so I mean, what it has is the same thing I've been talking about for years. Is the one thing that really set Bitcoin, apart at the beginning was that it was the first thing, right? So you have network effects.
Yeah.
It's out there, and then you get into Ethereum. You go, okay, well, here's Ethereum. Well, the thing about Ethereum is it's been around a long time, right? And it's different than Bitcoin, right? So it's not like Ethereum came out and was like this competitor to Bitcoin. It does something different. So within something different, it's kind of got somewhat of that kind of network effect that Bitcoin has overall.
It does.
And so that's what's, really that's what has it today. It's got length of time that it's been around. It's got, like you said, the number of projects, dApps that were built on it, still, far exceeds any other one out there.
Yeah, but look at network effect in two different ways, in my opinion. Network effect from a utility perspective is very different than network effect for luxury perspective, right?
Yeah.
You can have a network effect inside of a brand like Louis Vuitton or some of these, Supreme. Supreme would be a great example of a network effect, right? I never heard of it when I was a kid, and now people are paying $20,000 for apparel, a sweatshirt that says Supreme on it, or shoes that say Supreme on it. So, the longevity of those network effects is really the question. And I think the longevity of a network effect has to be rooted in functionality, it has to be rooted in utility. And the question that opens, Ethereum up for a large number of rebuttals, in my opinion. I don't think that the network effect that it's experienced is anything other than a gambling, speculative network effect, right? It was the only casino built in town at that time. But people have no loyalty to a casino. Right. They just want the best odds at the table, and they want the best experience in the casino and in the room. And to y'all's point and to my point, I don't think that it's the best casino out there anymore. If you're going to talk about speculative meme coin plays, it's Solana, right? Well, I'm not
exactly.
going to.
Exactly. Yeah, and I'm glad you said it, because that's exactly where I was going with it. Up until this point, or up until pretty recently, it's been because it was the first out there and had all the attention and did all that. But now, again, unlike Bitcoin, which doesn't really have a competitor, right? It does. Just like you said, you've got all these other ones out there, and they do some things better than what it does. And so, I think when we're looking at it, it doesn't mean necessarily, hey guys, Ethereum's going to zero right now or anything. But what it means is when you're looking at Ethereum and you've got money, you're like, okay, what I'm going to invest in, what I'm going to put it in. You're looking at Ethereum, you're looking at Bitcoin. It's two different things. It's absolutely two different things. So, again, I'm always big about, listen, if you got extra money, put it in Bitcoin. And a lot of people coming up today, though, they're like, man, but I have, $100 or something, or $1,000. And what's that going to get me at the end of the cycle when I can put it in these shit coins and blow up, right? Well, the problem is your account blows up for most of you out there, really. Let's be honest. I'm not trying to be disrespectful or rude, but the reality of it is, for most of you, that $1,000 that you had you just put it in Bitcoin and then just got out there and said, how can I make a few extra bucks and keep with that Bitcoin? You would end up being a lot further ahead at the end of the cycle than if you're going in and out of those shit coins.
In 2015, the top 10 coins that existed in this space, number one was Bitcoin. Everything else no longer exists, essentially.
Either that, or it's moved down on the list, like Bitcoin Cash to the bottom. One thing I'll notice.
I don't think Bitcoin Cash had forked it. Maybe it had, but then you could say the same about 2017. You could say the same thing about 2019, right? And even though there may be a few that are still on that list, what's the number one? What's been number one every single time those lists reset itself? It's Bitcoin. Period. End of
Yeah.
story. Right.
Every
Well, and
time.
I
I'll
got to
tell
jump.
another note. Yeah.
I
Go
got to
ahead.
jump, guys. I got to meet somebody here at the conference, but you guys can continue. Thanks, Chris, for you worked through our technical difficulties here.
Yeah,
but,
sorry about that.
It's good
One of the
time.
things
Good
I was
time here in
gonna,
Nashville.
Fantastic, man. Hey, have fun out there.
Thank you.
one of the things I'll tell you, I've been at a lot of the conferences, and there's been a pressure that's been put on speakers from BTC Media, where it's like, hey, this is a Bitcoin conference. We don't want to hear anything about any other coin other than Bitcoin, right? And that has been something that you could feel at these conferences, because people would deviate and they would mention other things on stage and they'd get booed off stage. I mean, it's pretty remarkable.
Harsh.
Yeah, very harsh. That's not going on in this conference. Nobody wants to talk about anything else. This is a very, very different feeling, because the TradFi people are here to talk about Bitcoin, period. There is no other, distraction in the room. And so that, I think we've mentioned this on our Beards and Bitcoin several times, but I'll say it again. I think if you've been in Bitcoin up until this point, you should forget everything you know, because that was all subterranean growth.
Yep.
The new growth is above the soil. And no one that's focused on that growth even understands the subterranean growth. Like you go to a lot of these, TradFi guys, and you talk to them about Shay 256 and their eyes roll back in their head. They don't even know what I'm talking about, right? So, but they're controlling billions and billions of assets assets under management. Like they control something. So there's this fresh perspective that is at the conference this year that we've never seen before, where it's not a crypto conference that has to be focused on Bitcoin. It's a Bitcoin conference that wants to be focused on Bitcoin. That's awesome. That's like, I think it's the beginning, not the end. I think we haven't even seen the maturation of what this looks like 5, 6, 10 years from now. And I would venture to guess that the same people that have made their bet on being the growth mechanism for that, I think they're here for the long haul. I mean, I think Larry Fink wants to see the seed sprout into an oak tree, and he's here for the long haul, right?
Well, I love the way you put that, man. I love the way you put that. It's a Bitcoin conference where people don't want to talk about anything else. They just want to talk about Bitcoin. And I think the guys hosting this thing, man, they're missing out by not hiring you on to kind of give them some sound bites there with that. But I think, again, though, but I love that you say that, because it just continues to seem at the point that I've been talking about for the last few years, which was come this cycle, this was going to be where we were likely to see the institutional involvement, and that changes everything. And, I know the people who continue to come back and watch the show, I know they hear us say it over and over again, but we do that because this is legitimately that difference, right? Again, prior to what we've got with this institutional involvement was, may it work? May it work? I mean, we all thought it might, and we all hoped it would, but, things could happen.
Well, 2020,
we got this institutional involvement. Now we got, like you said, the guys with the big bucks, right? And we can hate on them all we want, but at the end of the day, getting the attention of money like that is what's going to continue to push Bitcoin.
In vehicles other than self-custody Bitcoin, right? Yeah. That's the other potent part of this that we continue to beat home, is like Bitcoin's the base product. There's derivative products that are coming off of it that have de-risked it significantly, right? So if you're talking about the ETFs, like that wasn't even around in 2022 to talk about. 2022, I remember very distinctly the feeling of 2022's conference. And why do I remember it? Because the only institution that was making a bet on Bitcoin was Michael Saylor with MicroStrategy. Like, literally, you could go through the list of every speaker at 2022, there was no captains of industry that were making a bet on Bitcoin. They were all industry leaders. They were all bleeding edge technology developers. They were all people who were trying to push this narrative of like Bitcoin's here to stay. But they weren't the rich guys that run the world that were sitting at the table going, yeah, I'm gonna add it to my balance sheet. So now you've got an asset class that's been de-risked because you've got the 800-pound gorillas in your corner, and you've got now Michael Saylor is one of 24 people that are significant that hold Bitcoin on their balance sheet that are on stage talking. It's like the dam has broken, and that is a significant difference. And I think for years to come, we will not see the growth potential until it's too late. I don't know what's happening in the shadows of Bitcoin development, but I can tell you it's being done by the biggest people out there that have the largest appetite for expansion and adoption.
Well, and you bring up, so, again, another great point here. So we go from you and me and, people listening here and we're kind of collecting our Bitcoin along the way, doing our things. And so now we get to this point where now we've got, as you said, captains of industry out there, they're putting it on their balance sheets. Again, we talked about Mara earlier, which is in the full hold strategy now, which is everything they mine, they're going to keep. When it dips, they're going to buy more. And so we've got all these, and you got, oh my gosh, Mark Yusko's company out there in Japan, Metaverse or something like that. I think it was, I can't remember what it was exactly.
That said they were adding as well.
Yeah. Exactly. So you've got these companies now of all different sizes starting to do this. And of course, now in the US, we've got the accounting rules change that's coming in, allows them to report their Bitcoin holdings better, which makes it more advantageous for them to actually bring it in instead of a drawdown. So we go from one MetaPlanet. Yes, thank you, MetaPlanet. That's what it was. So we go. Sorry, Mark, if you listen to this, I didn't mean to mess up the name of the company there. But yeah, so we go from us to them. The next step is potentially what Trump's maybe going to talk about, right? We got
crazy.
Senator Lumen putting in the legislation. She's supposed to, I guess she's speaking over there at the conference or something. Yeah. And she's supposed to mention, hey, listen, I'm putting this through. Here's what the legislation says. See if we can get it passed. I don't know if it does, but the fact that they're actually floating it out there and they're talking about it, maybe it doesn't happen this year. Maybe it takes a few years to happen, but you get what happens all of a sudden when you go from not just
right?
companies.
Yeah. Well, here's the thing. We're trying to skip two bases in one play, right? The first base that we're landing on right now is the institutional corporate adoption, right? And we've got 10 years before we even see, halfway point of that, right? There's a lot to happen in that space. The political adoption, to me, time will tell, because I can't trust the incentives and their motives for getting into the conversation. I absolutely can trust the motives of a capitalist, publicly traded company. 100%. And what they're, you see what I'm saying? So I don't know if it's even important that we get on the political scene other than what we've already done. I think the most important thing is that we get real big institutional buyers. And so here would be the reason why we built the Bitcoin DCA bot was for this very purpose, right? How do you get, let's say you're in a company and half the board wants to hold Bitcoin on the balance sheet and half the board doesn't. Where you fall in that decision should be directly proportionate to what the purchasing schedule looks like. I think every board could get the board, proportionate to some ratio into Bitcoin, right? If I have $1 billion of cash, I probably can convince the board to buy 10 million in Bitcoin, right? It's not a heavy act, but the question then becomes, who's responsible for those acquisitions? Who's responsible for buying Bitcoin? At what frequency are you? And where are you going to hold it? And who's going to have the liquidation rights to it? Like all of those things have to be answered for the institutional buy-in to be what we want it to be, right? And so that's why I think we're at the beginning stages of that. If we have a tool, which we do, that can help them get their arms around, okay, here's what it looks like with this buying schedule. Here's what it looks like with this buying schedule. I think the adoption across corporations and institutions, it eventually will be 100%. But they're going to have a tool to feel confident in, and to set it and forget it, that a board can vote on, that a board can say, you know what, we want to allocate X number of dollars, and we have a computer software that's going to do that in a systematic way that's as disciplined or more disciplined than any human buyer could be, and that's going to give us the exposure that we want over a certain period of time. When those types of tools become the norm, and every company that's asking the question out there, well, should we hold some Bitcoin on our balance sheet? If they start getting the tools and the information to act on those things, we're going to see an influx of capital into the Bitcoin ETFs, unlike anything we've ever seen. And it's the same thing that I said to you on our first show. We're going from a very narrow and deep channel of liquidity to a very wide and shallow channel of liquidity. And that's the best news. What would be better for the industry? A bunch of OGs to hold 90% of the coins in their cold storage wallet forever, or BlackRock to have 90% of the coins and create infinite number of derivative products off of those? If you're around financial markets, the answer is pretty clear.
Yeah, unfortunately, that's not going to bode well with the maximalist, and and I get that, guys. It
will bode well. Here's my good news for the maximalists, and I said this to you before. You will know that what I'm saying has happened when there's a deviation in price between spot and ETF, and it will happen. And here's why I will tell you that it'll happen, because economic law dictates that it will happen. Why do I say that? Well, can you sell your ETF on Saturday night at midnight?
Exactly. Cannot.
No. Can you sell your spot? Yes, you can. Is that a flexibility that's worth having a premium? Absolutely. Doesn't mean that you shouldn't own the ETFs. Just you should have diversified outlooks as it relates to how you own Bitcoin. I'd rather own hard Bitcoin in self-custody coupled with MicroStrategy shares, coupled with ETFs, than have all my eggs in one basket. And I don't know of another sophisticated investor that looks at it differently than that. And I don't expect sophisticated investors that have no reason to bet their net worth on a flyer to ever make that bet. Like, why does somebody who has $100 million need to own 65 million in Bitcoin? They don't care. They're just looking at how can I maintain my wealth?
Exactly.
So when you're looking at holding Bitcoin against an inflationary dollar, that's how you maintain your wealth. But it has nothing to do with upside. It has to do with downside risk, right? You're actually measuring the wrong side of the equation when you're looking at those wealthy people who are wanting to divest. So it's a we're at the bleeding edge.
Again, it's just all this great stuff coming together because institutions are a part of this now, because we got the spot ETF, right? What we're talking about, things we're talking about here, really was a much riskier prospect prior to this. I know, again, I do shows with Gary all the time, Gary Cardone, and he always brings up the fact, that owning Bitcoin at $13 or $100 or whatever, or even $1,300 was a lot riskier than buying Bitcoin today at 66 or 68,000. And that's a hard thing for a lot of, retail traders, retail investors to kind of wrap their head around.
Well, let's break it down for them. So when you're measuring risk, right, you have to measure it against what I could consider the worst case scenario, the catastrophic risk. So it's not that your money is, you have a lot more to risk when the price is high and buying. That concentration risk has to do with your purchasing schedule. It has nothing to do with the risk of the underlying asset, right? So yes, personally, does Tillman Holloway have a lot more risk being a purchaser of Bitcoin at 60,000 versus at 15,000? Yes, I do. Why? Because it has further to drop. I can lose more dollars per Bitcoin at 60 than I can at 15. But that's not the whole picture, right? Because the likelihood of Bitcoin going to zero when it was at 15K was exponentially higher than it is at 60K.
Yes.
So the catastrophic risk that you were exchanging for the upside has been taken off the table. You don't have to take on that catastrophic risk for the upside. You don't have as much upside, but you don't have catastrophic downside. And for the wealthiest people in the world, they're not even looking at upside anymore. They're looking at downside. And if you can convince them to put 4, 3, 2, 1% of their portfolio into this asset class, that's more meaningful. That de-risks it even more. Doesn't mean it can't go down to 30 grand and you lose half your stack. But the argument would be is that a 30 grand Bitcoin, a Bitcoin that fluctuates from 60 to 30 is a stronger Bitcoin than one that fluctuates from 15 to 7.
Yes. Yeah, 100%, man. I love that you said it, because that's exactly the point, right? And it's the same thing. Even when I talk to traders, most people come in and they trade when they first come in, before they really understand markets and how to approach and whatnot. And they look and they go, well, what is my total dollar return? They're looking flat number returns is what they're looking for when they get it. But really, the way that you should be looking at trading is, what is my risk in that trade? And once you get beyond that, what is my return on that risk?
Correct.
And so instead of looking for absolute dollar returns, which is because if you're looking at absolute dollar returns, you're missing the whole thing. You're always going to lose.
Well, here's the analogy. What's more risky? Me paying $150 million for a prime piece of real estate on the corner of, First and Second Avenue in major city XYZ, or is it more risky for me to build a $30 million resort in the middle of nowhere?
Right. Exactly. 100%.
The risk of me losing 30 million on that prime piece of real estate is less than me losing the 30 million in the new development in the middle of nowhere. Even though I'm spending 4 times as much money to buy the corner of, Wall Street Boulevard, right? If I'm buying that for 120, the risk fluctuation of that price is less. It's never going to be worth 90 million. The odds of it going from 120 to 90 million are a lot smaller, infinitely smaller than the success of my business acumen putting a $30 million new development in the middle of nowhere and expecting me to get consumers there. Like, which one would you rather buy if you're the consumer? So Bitcoin, buying it at 60,000 is the same thing. It's like, do I want to buy something that literally everybody in the world wants, and the smartest people in the room will buy it from me in a nanosecond? Or do I want to take a flyer on my ability to pick winners and losers out in the middle of the field somewhere? Even though it's a 4 times the price, it's less risky.
Exactly. I mean, I love the way you put that in. And let's go ahead and extend it out. Buying Bitcoin versus buying your shitcoin of the day or shitcoin of the week. Again, you have an exponential potential return to the upside, but here's your problem. It has to actually get that return.
Yep.
You have to actually buy in and hold on until you get that return. And both of those things are rare.
And meanwhile, you haven't solved the problem of preserving your wealth against inflation. So,
exactly.
If I'm putting my money into a shitcoin, right, or into a meme coin, and I am betting on the appreciation of that meme coin over a long period of time, or even over a short period of time, I've not solved the very problem that Bitcoin is the answer for solving, right? And so I'm not diversified. If I'm betting on Bitcoin for the appreciation value, then I have not understood the real value of Bitcoin, because the appreciation value of Bitcoin is only driven by understanding the value that it possesses, right? Scarcity, fungibility, sovereignty. Those, if you don't understand those 3 things about Bitcoin, and you're just buying it because you think it could go from 60,000 to 120,000, then you're right. You should go buy the meme coin, because you're using the tools for the same thing, and one's a much more effective tool than that. But if you see Bitcoin for really what it is, it's not that tool. It's not for that. It's not made to do the same thing. So therefore, why would you put them in the same bucket and expect and prescribe the same solution to a different problem?
And so our listeners, hopefully they're catching on to what we're saying here. Buy Bitcoin, hold, okay? Buy your Bitcoin and hold. And it's especially if you want to dabble and you want to trade in the the shitcoin market and whatnot. Listen, I'm a trader. Day in and day out, I'm a trader. I have nothing wrong with you doing that, okay? But let's be real. Let's be honest with ourselves about what we're doing.
Correct.
If you're doing that. That's the important thing. And I don't see that discussed enough, throughout social media. Everybody comes up with a reason why it's the next Bitcoin killer or whatever, why it's better than Bitcoin. But at the end of the day, guys, the reality of it is it isn't. If hopefully you've been paying attention and you're listening, they don't compare. If you want to get out, you want to trade, you want to make some bucks, okay, do that. But understand that's what you're doing. If you want to, have Bitcoin, even if you're going to trade Bitcoin, have money put aside that you're not going to touch, that's in Bitcoin that you're not going to touch, because the odds are in the market you're going to make mistakes along the way. And those mistakes are going to cost you money. And that little bag sitting there holding that is going to protect you against those mistakes. Don't ever
disciplined allocation.
Yes.
Right? That's what you have to have. Like anytime you're investing, in my opinion, you have to have a disciplined approach, and you have to understand what the purpose of that asset is in your overall portfolio. What is it providing me? And so, if somebody said to me, "Hey, Tillman, I love playing the meme coins. They're fun. I get a lot of kick out of it. I like trying to bet the winners and the losers." I'd go, "Great. Sounds like a fun time. Which one do you like? Tell me all the stuff. Give me the juice." But in my mind, when I'm listening to that, the money I have allocated to Bitcoin, me thinking about that as the same piggy bank that would fund this is no different than me thinking buying an airplane is the same as buying a piece of real estate. Yeah. They may be the same purchase price. They may have a lot of cool, sexy features that make you feel good, but they're not the same asset, and they will not give you the same output. And so, you've said this a million times, and I think you're one of the most loyal people as it pertains to this message, is like, take your sweat equity in life and use Bitcoin as a savings account. Yeah. Don't look at it as even investing, right? Because when you look at something as an investment, you're measuring it against the gains. Yep. If you're making a bet on Bitcoin, you should be measuring it against the avoided losses.
Yes. I love it. Yes.
You can't lose that way. If you're DCAing into Bitcoin and you're going, okay, inflation was 9% this year. How much did I make on my Bitcoin? I saved 9%. I made 9% on my Bitcoin. It doesn't matter what the price is, because that number is hidden in that price. Yeah.
And that inflation's always going to be there, folks. We are a debt-based nation. Most of all the Western world is. And most countries are getting to that point, guys, that the few that aren't there yet. And the thing about a debt-based economy, a debt-based nation, is that you have to have inflation, because the idea is you're going to borrow and you have to pay that money back. So you want to pay it back with cheaper dollars or whatever your currency is in the future. So it has to inflate. I mean, this is all part of the system that it's in. So if you understand that, and you understand that there's always going to be inflation, you look for that deflationary asset. You look for that thing that's going to, like Tillman put there, it's going to save you, how much did you save versus how much did you make? So if you can do that, and then you take whatever else you want to do and try and make some more, that's great. That's great. That's fantastic. But if you're only trying to stay ahead and you're not protecting your downside, against that inflation, against what the government's doing and whatnot. I'm not here to tell you we're going to get, hyperinflation tomorrow or anything. That's going to take some time, guys. That doesn't happen overnight, especially if you've got the global reserve currency. It's different than what Weimar Germany was.
I'd
right?
say we already would have experienced hyperinflation if we didn't have the petrodollar to lean against the global economy, 100%. And so the interesting thing about that subject is the question then becomes, can we lose it in a day?
Yeah.
If we lose the reserve status in a day, and tomorrow every country that's buying oil with U.S. currency stops, what's the value of that supply coming back into the retail space, and what does that do to the value of the dollar in a very, very short period of time? That is what I would consider to be the catastrophic risk of the dollar. It doesn't mean that we couldn't support it with military might. It doesn't mean that we couldn't do lots of things to curb that, but it does mean that politicians, when they get in office, they know they have a very short period of time to accumulate a base. What's the most effective way to accumulate a base? To pay the base.
Yeah.
So when you inflate, if you get appointed and you have inflationary power, you're an idiot not to use it. Why?
Yeah.
Because it allows you to build the base that you need to win again and win again and win. And that's the fuel for the political, system. So if we're sitting here thinking, oh, okay, Bitcoin is now a hot topic with politics, the reason why is because there's a lot of people that love Bitcoin, and it's a unifying factor. It's something that bipartisanship, you could talk, I don't know how many Dems or Republicans are here, but all of the people here will vote for a pro-Bitcoin president. And so it's becoming this inflection point that can't be ignored even from politicians. But politicians are going to inflate the dollar, period, the end. It has to happen. If it doesn't happen, our entire economy will go to hell in a handbasket. Why do I say that? Because the debt thing that you said is key, but most people don't look at it the same way that we do. So debt is not, the debt that we're talking about is not measured in the household. The debt that we're talking about is real estate developers that have gone out and leveraged every piece of real estate on a variable rate. And a lot of those tenants they have a rising cost to live, so they can't raise rates proportionate to the cost of capital that they have. And the cost of capital with the interest rates going up becomes cost prohibitive. So what do they have to do? They go bankrupt, and they can lose if interest rates stay above 9%, you will see a real estate debacle in this country like you have never seen. So what has to happen? Interest rates have to come down, which means inflation has to go up. And that's just the nature of the beast. And what happens when you have an entire capitalist society that is predicated on borrowing money to make money? And you have variable rates that preclude people from continuing to make money because now it's just a liability on their sheet. So I don't see a politician out there that could make any bones about what's going to take place over the next 5 years from an inflationary perspective. They've got no choice, and we don't want them to stop. As much as it sounds great to go fiscal responsibility and that you had to do that 50 years ago. We're already on the exponential curve. Yeah.
Austerity right now is going to be very, very harmful. Businesses will go out of business, which means people are going to lose jobs, which means they won't be able to pay their rent, which means they're going to lose their homes. They won't be able to buy food. You guys, you don't understand, So
what's happening? Technology is driving the denominator of people included in the financial system up. So the debt that can be serviced by that group of people can also go up. That is the only way for us to make it out of this, is to innovate our way out of it, right? Is to bring value in the form of human capital into the equation at a greater rate than we had when we were, at a less violent inflationary rate. But that's okay. Like, there's nothing that keeps us from measuring things in trillions a decade from now. And then beyond that, who knows? But as long as you have the human innovation and the human capital that's constantly being onboarded, right? You have a population increase, you have more growth potential, you have all this intangible value that is in human beings. And that's essentially what we're going to be measured in from a nation state, is how quickly can we eclipse the inflationary losses with human capital and with the advancements that we bring to the table and the people that can be included in that, right? Because once you bring a whole new generation of folks into investing, then there's a lot more stability, there's a lot more capital there. All of that's a positive.
Man, I think it's a fantastic way to end the show today. As Tillman said, go make babies. That was what I got out of that. Tillman said, go grow your families, love each other, make babies, and you will help save the world, okay? Don't be selfish. Do your part.
I don't argue. I think that's a pretty good motto. Let's live a peaceable life and have as many kids as you can have.
That's right. That's right. Man, I love these shows with you guys every week.
A lot of fun. Thanks for carving out a different time for our travel and all this stuff. Bitcoin conference is pretty awesome. Glad we got to do it live.
For sure.
And, yeah.
Hey, man, I don't think we would have got to see your loud shirt if we hadn't, man. I love the shirt, man.
Listen, my wife picks up my outfits, and I said, well, why'd you pick that one? And she said, it just looks like a Bitcoiner.
I thought she was going to say, hey, so I could pick you out if I lose you somewhere in the crowd there. Find out where you are. But love the shirt, man. I love you guys being here. Thanks again for being a part of what we're doing every week here. And hopefully, little bit by little bit, changing lives, changing thought processes, not just with Bitcoin, but just about life and how to get ahead, and just thinking of it in a way that we aren't taught as we were growing up. It's these things that most of us have to learn later in life. And man, that's why I love doing this with you guys. That's why I love doing the shows I do with Gary, because we're able to get those points out there and hopefully get people thinking.
Actually, Gary's sitting 100 feet from me right now, so we're all. It's the concentration risk here at the Bitcoin conference is real. We got a lot
Get out of
the
building. let's not lose all my shows at once here, guys. Okay. All right, man. Well, hey, listen,
thanks,
man.
Chris.
Again, loved having you here. Have a fun time while you're there. Check in with us. Send messages. Let me know how things are going,
for sure. We will.
And we'll be back, guys, next week, Wednesday, normal time. Wednesday at whatever time we do it at. What time do we do it at? 12 p.m. Eastern, right?
Yep.
11 a.m. Central. So we'll see y'all then. And, I always say the only thing you control in the markets is how much you lose, which means basically your risk. And that's what we talked about today. So hopefully that's come across. Everybody have a great day. Have a great week. Have a great weekend.
To leave you from the Bitcoin conference, Moon Lambo. That's the
there
new
you
motto.
Go. All right, man. Hey, you guys have fun, and we will see you next week. All right, bud?
All right. See you, man.
Take care.
Bye.
All right, everybody. Y'all have a great weekend, and we will see you next week.